Welcome back. Let's go across to Hormuz now, who's there to tell us about all of the buzzing stocks which are moving around in trade. Hormuz, over to you.
Today is possibly the day of all the bombed out names making a move towards the upside, and Ola Electric being a case in point. Of course, it has continued to move from the second half of August, and it continues to extend those gains. 14% higher on that stock, up almost 30% now in the last 5 trading sessions. And take a look at the volumes here. Already we've had 65 crore shares change hands compared to a 20-day average of 18 crore shares. And of course, the month of August was the best one that it had since its listing last year. And with this move, the stock is also now comfortably above its 200-day moving average of around 59.5. The other one doing well today is Chennai Petro, and it's the biggest single-day gain that the stock has seen in 2 months. 6% higher on that stock. The stock is also doing well on very high volumes, almost 14 lakh shares changing hands compared to a 20-day average of just around 4.5 lakh shares. And in comparison to the charts, the next important level to watch out for on Chennai Petro is the 50-day moving average on the upside, which comes at around 692. The other bombed out name doing well is MobiKwik, and that stock is up almost 15% as we speak. It's come off slightly, but still a double-digit gain today, the biggest single-day gain since March of this year. We've already had more than 1.5 crore shares change hands, and take a look at the 20-day average. That's only 6 lakh shares, and still remains below its IPO price of around 278 rupees, but still significantly below, is almost 65% below its post-listing high, which is close to 700 rupees a share.
Okay, Hormuz, thank you so much for that. We'll be keeping an eye out on all those buzzing stocks as well. But with that, we're absolutely out of time on this edition of Halftime Report. Thank you so much for tuning in. Up next, your business lunch, leaving the market almost at the day's highest point as of now.
Welcome back. Virtually at the high point of the day for the frontline index, we have Bajaj Auto, which is doing well. But the last few minutes, we've seen a big spike in names like Eternal as well, which is up around 2% as we speak at the high point of trade. But we do have an important management joining in from the sidelines of the Motilal Oswal conference, Ekta.
Yes, absolutely. We do have the management of Krishna Institute of Medical Sciences. We have Sachin Ashok Salvi, who's the CFO, joining in now from the sidelines of the 21st Motilal Oswal Annual Global Conference. Sachin, hi, welcome to the show. If you could just start by giving us a sense in terms of the 2 important statistics for your hospital business. Your occupancy, which was at around 48% in the previous quarter, and your average revenue per occupied bed, which was up 11% in the previous quarter. How exactly are these 2 statistics panning out in this quarter?
So we were operating in 4 clusters. We have added 1 more cluster, that is Bangalore cluster. We have just now added. Our Bangalore hospital has started operation, in fact, from 13th of August itself. Once we have a full-fledged operations in all these clusters, I think the ARPOB will significantly improve, because for all these years we were having significant presence in Andhra Pradesh and Telangana. Now since we are having presence in the cluster of Maharashtra and in Bangalore, you will even have a significant improvement in this ARPOB as well as the ARPP, the 2 statistics which you have referred to.
Right, Sachin. Good afternoon. You know what, if you could give us a number in terms of ARPOB that we could expect for FY26, and also if you could talk to us about, your margins. Obviously, because of all this expansion, there's a bit of an impact that comes in on the margin front. So when do we expect normalized margins now coming in for the company?
So the Thane hospital has started operations only in the month of May, whereas Bangalore is getting commenced in August and September respectively. We are anticipating a EBITDA erosion on account of these 3 units in the current financial year, which would be typically about in the range of 60 to 75 crores. The normalized revenue or the normalized EBITDA margin we are expecting to flow back in the second or the first quarter of the next financial year. As far as your first question on the ARPOB, we are doing about 45,000 kind of ARPOB. Given the higher ARPOB business which we are having from Thane, that is in Mumbai as well as in Bangalore, Thane we are doing almost 55-60,000 kind of ARPOB, whereas in Bangalore we are anticipating to do about 75,000 kind of ARPOB. Once that kicks in, the ARPOB is significantly likely to improve from 45,000 to about some 55,000 kind of ARPOB at a consolidated level.
right? So 42,000 turns to closer to 50,000 even as your newer geographies stabilize and you expect normalized margins to come by in sometime at the start of next year itself. But, from a growth standpoint, what are the other vectors that you have? Will it be newer hospitals? Will it be newer verticals? Because I remember having this conversation with you sometime in the past where you said that you continue to focus on being this multi-speciality hospital in multiple regions and are not looking at maybe, diagnostic services or any other value accretive services. Are you still steadfast on that, or maybe some other opportunities have opened up for you?
No, we are sticking on to that. As far as the growth opportunities are concerned, we have a cluster-based approach. In our Andhra Pradesh clusters, we are heavily spending most of our resources on the oncology, which is the piece which we have said we will be concentrating heavily in the state of Andhra Pradesh. In case of Telangana, we are not doing much of a bed addition, but we are hiring more and more clinical talent for a particular specialty, and we are launching more and more specialties. We are launching more and more innovations in our Telangana clusters. Of course, Maharashtra as well as Bangalore cluster, which we have recently launched, we will be doing most of the oncology business as well as the other multi-specialty business in that market. In Kerala market, we will be spending our resources on the transplant surgery. We will be also concentrating on the international medical tourism. So there are multiple growth levers or multiple levers to extend in these respective markets.
Okay. All right. Sachin, I just want to touch upon a bit of news. The AHPI, which is basically the Association of Healthcare Providers of India, has withdrawn the suspension on Bajaj Allianz General Insurance, which was basically, there was an issue between the AHPI and Bajaj Allianz because of various issues in the insurance space. Are you a part of AHPI? And can you give us a sense in terms of what is the issues which are actually being faced between insurance companies as well as hospital companies? We do understand it's around revision of rates, around deductions, new empanelments. Is all of it solved?
Yeah, this is very much solved. So, as you rightly said, the issue was related to the price fixation because the prices were not revised for most of the hospitals in last couple of years. When we have approached for negotiation, they were not coming for the negotiation on the table. Ultimately, when we were to suspend the cashless operations from our group of hospitals, they came onto the table and the discussion had happened in a positive ways. We have withdrawn the notification which was earlier issued. And I think the matter is mostly sorted. We want the insurance companies to discuss with us on a more of a we want to work on a more of a collaborative approach rather than a negotiating approach. I think once that is done, most of these issues will get resolved.
Just before we let you go, I'm looking at the annual report of Somnath Finance Corporation Limited, which is a related party. It was released yesterday, and there are a lot of related party transactions between the two as well. Could you, throw some light on this? Are they done at an arm's length basis? Are you looking to reduce these related party transactions? And what's your plan with Somnath?
Certainly this will get reduced. First of all, we do follow stringent corporate governance practices. All of these dealings or all of these transactions which has been done with the related parties are at arm's length. And let me assure that all these transactions will die down or will be reduced to a larger extent in the coming years.
Okay, all right, Sachin, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Krishna Medical. That stock just about holding up within a gain of around 0.8%. We'll take a short break and be back.
Welcome back, and joining us on the show now is Kunal Shah from Nirmal Bang. Kunal, hi, thank you so much for joining in. It's a strong day when it comes to gold and silver, both of those commodities. We're trading at record highs here. What is your sense on where the prices could be by the end of this year, starting with gold first?
whatever has been happening in gold is quite interesting, mainly on account of what we are seeing is the sharp expectation building that you will see a sharp rate cuts in next 2-3 months, maybe a perhaps 100 bips rate cut by the US, or even more aggressive than that. That is building in the price. Second is the geopolitical standoff between US, India, and the way entire BRICS and the Western economies are decoupling right now. And that is sparking further geopolitical worries amongst the global investors, that how this tariff and the global geopolitical tension would translate into the growth. And that is something worrisome for most of the money managers. So I think there is a shift taking place, the diversification into gold. If you look at the central banks, even at these rates, we are seeing some buying coming in. So net, it looks that gold is heading towards $3650, $3700. So the target is definitely on the upside. And the way things are shaped right now, there is no major option left but to invest in the precious metals, and that sounds quite safe haven and likely to do better. So you have upgraded. I was of the view that 3550 was the expected to be the top for this year. Now we are upgrading that to $3700.
3,700 for the international markets. What would that really mean for the Indian markets, where we've seen rupee continue to depreciate, the worst performing Asian currency that we've seen in the previous quarter as well? So from here on, with the kind of rupee depreciation, how does the Indian market calculation work like?
That should translate into somewhere between 1,08,000 to 1,09,000 rupees on Indian basis. And we don't know what is going to happen with the tariff, whether US is going to cut back another 25% duty which has been levied, or whether it's going to continue. All this is, big questions to determine the outlook of Indian rupee. But we expect if there is any positive news on the tariff front, I think rupee will sharply appreciate, because I think the major reason why rupee has depreciated is because of the US tariff. So let's keep our fingers crossed and expect some positive outcome. I think the maximum upside till then for the Indian rupee would be somewhere at 89. 89 should be the peak out point for the Indian rupee. And on the downside, we can see 86.50, 86, those kind of level would be the support.
Kunal, also come in on silver prices, because apart from the safe haven buying, silver also is about a deficiency this year. We also are looking at very strong industrial demand from China, from much of Asia as well. With 40 done, inching very close to $41 an ounce right now. What is your sense on where silver could be by the end of this year?
Well, silver, the story is not just demand, it's a supply-driven story. I've mentioned before in your show that a lot of the silver mines, top 2, top 3 mines in Mexico, which produces 25% of the global silver, those mines are likely to get exhausted by next year, or perhaps even in 2027. So this is a structural story where the supply side is shrinking and the demand side is growing quite rapidly. So we've seen a news where US has added silver into the critical mineral imports. So now looking at the way the data centers in the US, the way they are expanding, the way it is consuming the power and everything, silver they have added into a critical mineral list. So it means that the sovereign government of the US will be forced to procure silver. So I think at a time where the supply is shrinking, the deficits are growing, and the demand projections are increasing. So here, there is no point in predicting how much it can go up. It is going to go up quite sharply. I would say by the end of the year, by December, 1,35,000, 1,40,000, $45 on COMEX looks very much achievable, and it can really outpace my forecast and go up quite sharply. So be long in this commodity. If you see any decline, use those declines for the buying opportunity, and the outlook on silver is quite bullish.
So, Kunal, if you had like 100 rupees, and how would you divide it between gold and silver?
I would put 70 rupees in silver and 30 rupees in gold.
How are you also looking at the buying opportunities when it comes to India? We do understand that the investment is on the stronger side, not so much for retail or jewelry for that matter. And are these levels good to buy, even if for a fresh buyer?
I would say if you're not bought, and if you are buying from the investment point of view, keep a room to buy, because silver, we all know it's a very high beta commodity. If it comes down, it doesn't take time for it to come down by 5,000 rupees, 10,000 rupees. So whenever it comes down, you have a room to average. And I think one can remain long. 1,23,000, 24,000, they can buy it. I think it is going to go up. So my target for this year was 1,25,000. Even though the target is achieved, I would still recommend to buy, considering all the new development taking place. We've seen a small quantity bought by Saudi Arabia, Russia saying that they want to add silver in their strategic reserve. US is saying that we are adding this into a critical mineral as a commodity, like the way they are treating uranium, the same way they are going to treat silver. All these are indication that the more is likely to come as far as the upside is concerned. So I would recommend to go long, and I would keep, if I want to buy 100 grams, I would buy 50 grams right now, wait for a dip and buy the remaining 50 at the dip.
All right, that point is well taken. So if he had 100 rupees, he's going to buy 70 silver and 30 gold.
That's interesting, Manisha, because for 100 rupees at these prices, all you're going to get is Priya gold and some other silver, not the real gold and the silver itself. But be that as it may, what we'll do is take a short break, come back, get you more on the markets and stock-specific action. Stay with us.
Welcome back. Well, you're still watching Halftime Report on CNBC TV18. It's turning out to be a steady day for us. So we have the midcap index, which is up around 1.5%. Like Vinny pointed out earlier, a couple of these pharmaceutical stocks are seeing some amount of pressure. So we have Sun Pharma, which is the top loser on the Nifty. It's down around 2.3%. We have a couple of others such as Cipla, which is just about flat with a little bit of a negative bias at this point in time. The other stocks which are seeing some amount of profit booking include Reliance Industries. So that one, remember, had its AGM on Friday. It's down around 0.3% at this point. ITC, which is seeing a little bit of pressure, it's down around 1% for ITC at this point. On the upside, it is Bajaj Auto, which is really cruising away today, no pun intended, along with M&M, which is up around 3% at this point as well. So good going for a couple of these counters. From the broader markets, maybe we can pull up the mid-cap index and a couple of gainers for you, because that seems to be where really the interest seems to be coming back in today's trading session. There is some amount of possible risk on which is taking place for our markets, and it's good to see that. So we have the mid-cap index, which is up around 1.5%. We have a couple of other stocks such as CSB Bank. We have Trigon Technologies. We have Astral. A couple of these stocks which are managing to gain at this point in time. So some amount of interest which has come back in terms of the broader markets. In fact, good time now to discuss the markets more in detail. We have Rajat Rajkaria, the MD and CEO at Institutional Equities, Motilal Oswal Financial Services, Amit Ramchandani, who's the MD and CEO Investment Banking at Motilal Oswal Financial Services, and Ashish Shankar, who's the MD and CEO of Motilal Oswal Private Wealth, who joins in now from the sidelines of the 21st Motilal Oswal Annual Global Investor Conference. So we have a full house this afternoon. Gentlemen, welcome to the show. Well, Rajat, I'm just going to toss this question to you. There seems to be some amount of risk on, which is back for the markets at this point. The mid-cap index is up around 1.5%. The headlines from India-China talks as well as the India-Russia talks seem to be more positive in nature. Do you think that's fueling some amount of sentiment for our markets at this point, Rajat?
Yes, hi. I think there are two important things. First, our underperformance has been very stark vis-a-vis the other global markets. Second, I think at least people are now looking forward to some reforms from the government, the GST meeting, a lot more things which are there in the offing. The last 2-3 days of headlines where our Prime Minister has been forging more new partnerships and better relationships with our neighbors. Just all in all, these things are helping the sentiment, which has been impacted quite badly over the last few weeks, led by the tariff news.
Right, we take that point, Rajat. But while we speak about wealth creation, sophistication, there are three major legs to that, so to say. One are the institutions, the second are the HNIs, and the third are the investment bankers, and as a result of which, the ones who make all these things possible. Let's talk about the institutional side itself. The last 3 years or so, we do have, serious money coming in from the DIIs, not so much from the FIs. In fact, if anything, the DII money is letting the FIs exit. And this at a time when everyone is looking at India as the next tactical, long-only allocation and not just, a purchase for the moment. What explains this, and what do you think will bring the FII money back to us?
Well, I think at some point of time, as you will see headlines stabilizing and the macroeconomic and news flows being better, you will see FIs coming back. But I want to harp on two things. I think we give too much of headlines to the FII outflows and we give too less prominence to the DII inflows. This year, in the first 7 months, 8 months, we have already seen $60 billion of DII inflows into the market. I mean, pause that. It's $60 billion in 8 months. And with this trend, we should hopefully be $80 to $90 billion. In true sense, the Indian capital markets are exhibiting the Atmanirbhar Bharat theme that has been being played out. We do welcome the FII flows, but last 5 years we have seen how volatile they have been. What has been most predictable is the large savings domestic pool of money. I think that is going to be the story of this market for the next 5 years. That number is only going to get bigger. In this journey, if FIIs join us again, and they will join us, the real party will begin then.
Absolutely, real party will begin then. But, Amit, just coming to you in terms of, we've seen a lot of PE exits in the recent time, promoter exits that are coming in as well. Do you think the Indian market is in a space to absorb? Are we seeing a growth on that front as well?
So we definitely are seeing a huge growth there. I think from the mindset where investors were just willing to give primary to the companies, we have come to a scenario where they are very comfortable doing secondary exits as well. I think the point is well understood that if money is not required in the company, it is better that promoters or Ps take secondary exits. Right? We have seen the cycle also only enhance. Initially, we saw investments of smaller number, maybe 1,000-1,500 crores was something which Ps were investing. But today, that number is up to $1 billion. We are seeing a lot of large transactions, and that's only because they have that faith that they will be able to exit. We have seen a lot of companies where large stakes of Ps got sold very easily. Right? We've also seen transactions where only Ps were there and they've been able to exit the entire stake through markets. So I think the investor outlook is clearly changed for secondaries, and whether it is the promoter or Ps, mutual funds as well as other investors are very happy to give those exits.
Okay. All right. Ashish, I just wanted to come to you with regards to the HNI segment, because if you look at the statistics, they're absolutely mind-boggling. 33,000 millionaires added in 2024. The ultra HNI category is growing at around 12% CAGR. In that context, what do you think the pace is going to be? Do you think this kind of pace is going to continue, considering a little bit of the uncertainty that we're dealing with when it comes to markets? And I just want to add that, the 20 to 50 crore real estate space in the residential market seems to be slowing a little bit. Is that an indication of things to come? Ashish.
So, we look at the space in 3 different segments. So if you take the top end of the segment, and you can cut the number as you like it, but the way we look at it is the family offices or ultra HNI segment starts at about 100 crores, right? So today we've got about 20,000 families in that segment, and the total wealth pool is about 240 lakh crores. That's a staggering number. Now, if you come down to the 5 to 100 crore segment, you've got roughly about 70,000 families, right? But the wealth pool goes down as you go down the pyramid. It's about 23 lakh crores. And then if you go to the next segment, which is the 1 to 5 crores, you've got about 4 lakh families, right? Now, if you look at the total pool of wealth from a family point of view, it's growing at about 5%. So that's the number of families, right? But the total wealth is growing anywhere between 13 to 14%. So the total wealth is growing faster than even the nominal GDP. What is driving this growth of wealth is, of course, like Amit said, you know, there are a lot of monetizations happening. Now, these monetizations either happen at a promoter level or they happen at a professional level, because increasingly a lot of companies which are PE funded offer pretty decent participation for professionals as well in the wealth creation journey. Second, what is happening is that you're seeing an explosion of professionals with a lot of newer industries getting momentum. And thirdly, you're also seeing traditional wealth shifting to financial assets. So whilst we've seen a lot of interest in luxury properties, we've also seen people shifting from traditional assets, which are physical in nature, to financial assets. And this is basically driving growth. We believe this compounding of 13-14% in the total wealth pool will continue in the days ahead. As far as your second question is concerned, I think in the near term, I think Rajat spoke about it. I mean, there are obviously challenges. But I think sometimes we get caught in the near-term noise and tend to underestimate the longer-term picture. We believe the longer-term growth picture is very, very intact. If you take a 3 to 5 year view, the wealth pool is probably going to double in the next 6 years. So there is a lot of opportunity ahead. The other big trend to also follow is a lot of this wealth is getting organized. So whether it is at the promoter level who are creating formal family offices, and formal family offices like to deal with more organized wealth participants. Similarly, what is happening is even in the industry, a lot of share is moving to organized wealth platforms. So you'll see a confluence of these three trends driving growth over the next 5 to 7 years.
Take that point entirely. Rajat, Ashish, Amit, thank you for whetting our appetite on, the potential that this market, our market, and the economy holds over the next 5 to 7 years, notwithstanding the very near-term volatility and underperformance. Global investors looking at India as a strategic shift as against just a tactical buy. HNIs and, all the investors are now getting a lot more sophisticated, with record paper coming in over the next few years as well. So all these factors keep our markets buoyant. We wish you to have a good conference, and we'll have this conversation once again, in a couple of months, revisit the trends that we are speaking about right now. With that, we'll take a short break, and as we do that, let's tell you something which is extremely important to us. The good news that comes in for all you viewers. India's business news leader, just a click away on the CNBC-TV18 all-new app, which gives you instant access to breaking news, in-depth articles, financial world updates, anything that you want at your fingertips. You can download the app either from the Apple Store, the Google Play Store, or just scan that QR code, which is up for you on the screen.
Welcome back to Halftime Report on CNBC TV18. As of now, Nifty is managing to hold on to gains of around 0.6%, 24,568. I'm going a bit too faster, expecting the 25,000 to come soon. But day's highest point is what the Nifty is trading at. But what's going to be happening in the world of F&O? What are the important cues that we're keeping an eye out on this afternoon? Mangalam is here to give us those details.
Well, the bulls are doing extremely well this morning, especially after the drubbing that we saw in all of last week. So the Nifty doing well, and this despite the Nifty Bank, which has been an underperformer for a while, continuing its underperformance. Today's top batsman has to be, the IT Index, which is up by almost 1.6%, and that's contributing the most. Even the broader markets are feeling a lot better, in better shape today, where we have the small cap and the mid cap index actually outperforming the frontline index as well, with far more number of stocks which are advancing than the number of stocks which are declining. From an F&O standpoint, two things in particular stand out. One, with the Nifty moving higher, the India VIX has moved lower, telling you that there is put writing which is taking place and unwinding on the call side, and that's reflected in the put-call ratio as well. Going into trade today, the put-call ratio was at the lower end of the range at 0.72. Now that has spiked to closer to 1. So that is healthy signs from a bull standpoint for the market. Put writers are back. 24,500 put is seeing a fair amount of writing, though we are seeing some writing at the 24,550 call and the 24,600 call. So let's see where that goes right now. The 24,550 call has a premium of 80 rupees, and the 24,600 call that comes up for you on the screen, a premium of roughly 50 rupees. So the Nifty has to sustain above that 24,650 mark for these call writers to feel the jitters and perhaps cover their positions as well. The other important mark on the way up, now that we're doing well, would be the 20-day moving average. climbing and closing above that would provide some fresh support coming in to the bulls as well. A bunch of stocks which are seeing a lot of long positions being added. Keynes Tech, the management joined us on the channel today. They guided for some growth as well. So that stock seeing some fresh longs being added. Amber Ent and CG Power are the other two counters which are fairly well bid in today's trading session from an F&O standpoint.
Okay, all right, Mangalam. Thanks very much for that. So that's on the F&O space. We'll take a short break now, but on the other side, Manisha Gupta will join in. She's going to give us an update on what's taking place in the commodity space. Kunal Shah of Nirmal Bang will be with her to tell her, to give her his opinion. Welcome to Halftime Report, live from the Motilal Oswal studio. I'm Ekta Batra, and with me this afternoon is Mangalam Malu as well as Vinny Motiwala. Hi, guys.
Hi.
It's good to see some green on screen. After what was all of last week, we did see, the Nifty see one of its worst week in the last 5 months. It's good to know that despite the weakness that we saw on Wall Street on Friday, things are progressing for the better. The only question is, do we see supply at higher levels or not? Because we managed to hold on to those gains. The question is whether we build on to this or not. The midcap index has you believe that there are more stocks advancing, way more stocks advancing than the number of stocks which are declining. And the good part is that today's rally has been led by the IT pack on the back of that CLSA note. So the IT stocks are doing their bit. And we have a lot of individual stocks which are buzzing around as well.
Absolutely. Good afternoon, guys. So like you mentioned, right, IT is, leading the charts today, leading the way today. What is not doing well is pharma, a bit subdued there. FMCG not managing to hold on to that much of a gain. But, do not forget, there are a lot of, points that are coming in for the FMCG sector or the consumption sector, in terms of better improvement. GST Council meet that's going to be there on 3rd and 4th of September. So that is something that everyone will be keeping an eye out on. But on that note, let's get started with the show with our first segment, that is Movers and Shakers, where first up, we're going to be talking about Zydus Wellness. Mangalam, this one is buzzing away in trade, 8-9% of gains, and after this acquisition.
Yes, the street is really liking the comfort of this acquisition, and it's clicked well for the company, at least as of today. And why do I say that? Because the acquisition that they've made is that of Comfort Clicks, close to around 2,400 crore rupees, 239 million, British pounds. But more importantly, it's the first overseas acquisition of the company, and it is an acquisition in a space which has been growing very fast, and it's got a decent total addressable market as well. It's in the vitamins, minerals, and supplements segment, which is close to around $11 billion pound sort of market. And the company itself has seen a growth of almost 57% compounded over the last 3 years or 5 years when it comes to sales. So if I look at the last 3 years revenue of Comfort Click from 52 million pounds a couple of years ago, it's gone all the way up to 134 million pounds, which is nearly 50% of the consolidated entity's revenue. And this revenue, which is growing at 50% plus CAGR, is also margin accretive. If you look at their operating profit and look at the margins, it's close to around 15.6%. This compares with Zydus's own margins at 14%. So good growth, good size, good margins. The question is, what price? The price has been fairly fair as well. They bought this company at 2 times sales and around 10 times EBITDA. Not particularly bad for a company that is margin accretive. And for perspective, Zydus's own valuations are close to 4 times sales. So they've gotten at a fair valuation, for which the company has said this acquisition is expected to be cash EPS accretive from year 1 itself. So your revenues grow by 50%, your margins improve, it's cash accretive. And at the same time, it gives you, revenue synergies from different geographies, because currently Comfort Click operates in geographies which are complementary to Zydus Wellness. So you get the cross-market revenue synergies, and secondly, you get channel synergies as well, because majority of the revenue currently is generated through e-commerce and D2C, whereas Zydus's, own sales in e-commerce and D2C are slightly lower. So all these factors doing well, and that explains why the stock is up 7.5%.
Yes, absolutely. A thumbs up, which is given to Zydus Wellness in terms of the acquisition. But let's move on to the auto space, and thanks, Mangalam, for that. Bajaj Auto is in focus on the back of its August auto sales. Sudarshan is here with more details on what it looks like. Sudarshan, over to you.
The stock is top Nifty gainer, and it has turned positive for 2025, and it's up 25% from 52-week low that stock had hit in April of 2025. Now talking about the auto sales that company has reported for the month of August, and those sales have looked largely in line to slight beat to our estimates. total sales have increased by 5% up versus our expectation of an increase in the range of 2 to 3% has come at 4.17 lakh units versus expectation of 4 lakh units. Domestic sales have slipped, but those numbers were largely in line. Total sales in domestic segment have slipped 8%. But if you talk about exports, those sales were up 29%, and along with three-wheelers, these two segments continue to do well. Three-wheelers were up 21%, export has an increase of 29%. So what's next for the stock? So in the recent commentary that my company had made, it expects that in export segment, it's targeting 2 lakh units. That might happen very soon. And also issue related to rare earth magnet has been resolved. And on the probability of GST cut in the upcoming GST Council meet and the festive season, these are the two major tailwinds for the entire sector, not only for two-wheelers, and also company on the launch front is developing commuter electric and sports electric motorcycles. So apart from the strong set of numbers that company has reported for the month of August, even tailwinds, there are so many tailwinds for the upcoming months.
All right, Sudarshan, thanks a lot for that. We started the show by saying all the IT stocks are buzzing. This morning itself, CLSA came out with a note, and they see a valuation re-rating potential of about 10 to 15%. Rima joins in with the findings of that note. Rima, the IT index up nearly 2%.
Indeed, this is on the back of that CLSA note where they're saying the CLSA macro global economist is penciling in 75 basis points of rate cuts in the US in the next 1 to 1.5 years. We know that when the rate cuts come, when there are rate cuts, the valuations of IT companies go up. So therefore, CLSA believes that there is a potential for a valuation re-rating of 10 to 15%. Secondly, they also see a potential for discretionary spending picking up in real estate, utilities, materials, staples, and energy sectors, which is why they're positive on the Indian tech sector. And the key reason is attractive valuation. They've got an outperform rating on Persistent Tech Mahindra, outperform rating, a high conviction outperform on Persistent and Tech Mahindra, outperform on TCS, Infosys, HCL Tech, Wipro. So basically the entire large cap screen, a hold on LTI Mindtree.
Okay, Rima, thank you so much for that. So those were the top movers and shakers in today's trading session. Keep an eye out on them in the second half of the day as well. But a reminder for our viewers, unlock a value of and world of exclusivity, expertise and influence. Become a member of CNBC TV18 Access, a premium members only experience on CNBC-TV18.com. The membership includes access to CNBC TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions, and masterclasses and curated lifestyle benefits.